Hello and welcome to Mining Review Africa, and we are at Mining Indaba 2026, and I am speaking to Jonathan Veeran, who's partner and head of mining at Webber Wentzel. Jonathan, thank you very much for joining us today.
Thank you for inviting me.
Okay, now, as you know, mineral prices are rising across several commodities. In fact, some of them are reaching record highs. How is this shift changing investor confidence and decision-making in the African mining sector?
So Mining Indaba 2026 has been good in the sense that you've seen more explorers attending the conference. There's heightened interest in Africa, and that's primarily driven by the search for critical minerals, strategic minerals, and as you say, the commodity prices are on the up. Even though there's some fluctuation in the precious metal commodities, it's an upward cycle. And I think that's going to be the trajectory for the industry for the next short-term period. Obviously, a lot of that is influenced by geopolitics. And it's interesting that geopolitics formed a key theme at Indaba. The conference theme was Stronger Together. And people spent a lot of time looking at the link between governments on the one hand, the private sector, communities affected by mining, and governments. How can you extract the maximum benefit but create a stable environment for the investor confidence?
Yeah. Now, there's also been increased M&A activity in the mining sector. What is driving this uptake, and what types of deals are you seeing most frequently?
So there is a bit of a consolidation in the mining industry. I saw a stat a few weeks ago that suggested that even the largest of mining companies don't match the largest of tech companies,
Right.
which is interesting.
Yeah.
And I think there's going to be market consolidation over the next period. You've seen the recent merger between Teck Resources and Anglo American. You've seen other attempts to secure copper supply.
Yeah.
So I think that's going to be the flavor of the month. But you've also, over the last few years, seen a number of restructures, unbundlings, and that's also yielded positive results because a number of those companies which have been unbundled are looking for assets outside of South Africa where they have a base in South Africa. So I think we're going to see the emergence of a number of diversified miners. It's not going to be in the next 2 or 3 years, but over time as the assets become available. And I think we'll see once again African mining companies looking outside of the continent maybe for other assets.
Right. Now, I'm sure you know there's a lot of talk about gold, combat PGMs that are on, rising prices. Now, these are often described as long-term strategic commodities. How is the outlook for these three categories of minerals influencing current transactions and also future mining strategy?
So I think speaking to gold and silver and PGMs and all of those commodities, I think that's in a sense driven by demand, but the demand is created by geopolitical fluctuations, which I think is quite important at this time. I think most economists will say to you, when you have geopolitical struggles, people default to gold. And I think that's in part generative. But remember, the price of gold has been on the increase for a number of years. It's had a massive uptick between June last year and now, but it has been on the upward trend. Same with PGMs, more recent, and silver as well. Same sort of pattern. So I think for those commodities, they will stay stable. I think the mining companies will be profitable at a much lower price, and they may have super profit years. So I think that's good. But I think the other commodity that we didn't mention, but which is important, is copper. I think there's a chase on for copper, mainly in South America and in Africa. There's a number of good copper mines being developed. And I think that's the commodity to watch. If you look at many of the public statements from the major mining companies, they've all been quite clear that, copper, lithium is what they want to have in their portfolio. And I think there'll be a lot of M&A activity and asset acquisition, and that will be driven by that. I think there's another, just in the South African and the sub-Saharan context, is that there's an opportunity for junior miners with that sort of portfolio, to flip up the assets over a long term, take it to bankable feasibility, flip it to a major. And I think that's what we need to be driving. And I think what would be beneficial to African governments is to create the regulatory framework which encourages exploration. Because even though we want these minerals, a mining project takes between 15 and 17 years from the time you find the asset till the time you mine the asset. Then you've got to put in the logistics chain, the port, rail infrastructure. So I think there's an opportunity here for governments to take heed of what they can be doing, and going to the theme of Mining Indaba 2026, build together, build stronger together, and create those environments, create those infrastructural changes for the long-term benefit of the countries.
Absolutely. Well, Jonathan, as always, thank you for your insights and for joining us on Mining Review Africa.
Thank you, Hillary. Good to be here.